Hi, good evening, ladies and gentlemen. Just going to do a quick intro before we get into today's trading. Today was a tricky day. Our view was more or less right, but due to the kind of risk management we had to do, um, it did not go so well for us in the beginning of the day. But as we progressed through the day, we just kept managing our position, managing our risk, and eventually came out with a pretty good profit. We ended up about 5 lakhs for the day, and I hope you have some takeaways from this, and really looking forward to all of your feedback. This is something that we've started on the NiftyBN channel, Ravi and I together. We want to show people that trading can be done transparently and freely and in the open, and we appreciate all of your feedback, good and bad, so that we can make this better for everyone. And I look forward to engaging with all of you, and I hope you enjoy the video.
Good morning, ladies and gentlemen. So we are returning 1,000 points later. So we took a break through the budget session, and yeah, from when we ended our trading session to now, we seem to be 1,000 points apart, and that's done good for us. And some of our positions are Reliance, and some of the other cover call positions have benefited a little bit. Um, and the trade plan for today's expiry is quite straightforward. We are in an uptrend. US futures ended slightly in the positive and now are trading in slightly in the positive. Nifty looks to be opening with a slightly negative bias. So the idea here will be we will look 14,800 seems to be a very pivotal sort of level, and right now we are at a support zone. 14,750 is like a support zone. So we will wait for the first few minutes and probably look to sell the 14,700 to 14,900 triangle, and then we will sort of actively manage that through the day and see where we go from there. Yep, it's 9:09, 9:07. The pre-market settled. Basically, Reliance looking to gap down slightly. All of the banks looking a little weak. HDFC, IndusInd, Kotak, ICICI, every bank that matters access. Gapping down slightly, so Bank Nifty should be down like 0.5%. So the pre-market is indicating an open at around 14,780. Actually, if you look at the index futures, it's looking slightly worse than that. And this is more reliable. So the opening will probably see an immediate dip as soon as we open, and that should potentially give us a good opportunity to sell the 14,700 put right off the bat. Okay, so we have now entered our trade and we're just ramping up the position. So we've seen a dip towards 14,750 and a pullback from there. So we're selling the 14,750 put. I think 14,700 seems to have max in one of the higher open interests from the put side. So that should be a very strongish range to work with. We'll move down the calls if this starts going against us. We're not working with our usual setup, so that is definitely slightly inconvenient, but it's okay. Should be alright. Now we set, just for the purpose of risk management, we set stop loss market orders on these. We generally set stop loss markets only on the upside, but sorry, only on the downside, because the upside is generally manageable. You will have reaction time to move up the puts. Okay, it's 9:22 and we've entered our position for the day. We're now strangling bullish view where we're seeing 14,800 being taken out. That's the idea for now. We have about 70 points in the strangle, 14,750 and 14,850. And here we're strangling 14,700, 14,850. So this is what it looks like for now. The idea will be, if we continue to move higher, then we'll move up the puts. If we break the support that we saw in the morning, if we break the dip that we saw in the morning, then we move down our calls to 14,800. That's the plan for now. Okay, so now we're heading into the day and we're now, it's 9:30 and we are looking to take out the opening low. So to risk manage, we will partly move down our calls to 14,800. Yes, we might be getting a bad price on this and reversal will inflate these calls, but we have to sort of do this to manage our other side. We have to balance it, otherwise it will give us a very bad skew in terms of our directionality. Here we're just going to hold on for now. Actually, we can still, we will move these calls down as well. There's no point in not doing it for now. After this, we'll look at the OI and see what significant changes have happened. We'll give the first half an hour to let the OI settle down, and then we'll see what's happening on that front. Okay, so from the OI, 15,000 call is seeing a huge spike, and so is the 14,700 put. So 14,700 to 15,000. That's where the range at the moment is indicative. So 14,700, 15,000. This is the range that we're going to work with. and yeah, what we'll be working with. It's 9:35. Okay, so what we're going to do now is, now that we're seeing a recovery from the low, we're actually going to risk manage our put side further at this point of time. So what we're going to do is add to the 14,750 call position, because there's no reason to assume too much upside momentum today also. So yes, we are partly selling into the rally, but the idea is to risk manage our put side. We are still bullish, obviously with this position, we are still bullish, but we want to cover our risk a little bit. Okay, 11 o'clock update. Bank Nifty continues to trade at the day's low. Reliance is mostly sideways. Premiums are still crashing, which shows that potential downside can't be too much. Lot of open interest being built up around the 14,700 mark, so possibly an expiry. FMCG is broken out, so I had a breakout in FMCG, but IT is breaking down. Both Infi and TCS are just, both IT is making lower highs, lower lows all days. So more or less, we're still pivoting around 14,700, and there doesn't seem to be momentum anywhere. Whereas our position as of now, our whole position is straddling 14,750, and we want to see a good breakdown below 14,700 to go inverted or make any changes to this position. Same here, we have the same position now on both accounts. So that is where we are for now.
Big uptick on the bank Nifty after trading around day's low and what was looking like a lower high, lower low pattern. So big jump there. Premiums continue to crash. IV is crashing as well. Not much of a change. IT also recovered a little bit. Not really, it's still down. So you can see that essentially where positions are getting built up is this 14,700 put and 14,800 call. These two continue to spike and have really taken the lead. So 14,700 to 14,800 is what we're positioning towards. We are holding the same position. We'll continue to hold this position. You know, our view is that okay, market would get bought, market would move higher, but why did we have to move down our calls? It's very simple. We have to manage the facts that our sold put is inflating, so we have to balance with a call. Doesn't matter if you get a very bad deal, you can do it in trenches, but it's part of the risk management. Of course, we always have our SLM orders open, but one confusion, and I got this question also about the SLM is, um, will that SLM be my stop loss? No. If the puts expand, I will move up this SLM. I will balance the trade through the call side, but the intention is not that, okay, my SLM is going to hit and then I'm out of the trade. That is not the idea at all. Now that we're seeing this sudden recovery of close to 0.8% on the bank Nifty, our calls are really expanding, but that's okay. The idea will be we need to see a proper breakout above 14,800 to then shift this straddle position. Probably first go inverted with our puts and then move the calls up as well. But we'll wait for that. No need to be in a rush. When you have a sudden 50-point move, the options will really expand, and yeah, it's not the best time to adjust it. You need to wait for that level to be held and then see what the components are reacting, how the different components are reacting before adjusting. We've moved some of our puts to 14,800. Now we have a partly inverted triangle for a little more than one third our position, because now we're looking like we might head into the green. So yeah, partly inverted triangle and short straddle remains at 14,750.
Okay, 12 o'clock update. We basically moved up our short straddle to 14,800, and we also, okay, this is MIS, we are covering our Bajaj Finance long. So We've been long Bajaj Finance, and now we're finally covering that. So taking a little credit from the call side, selling a call, and yeah, we seem to be moving up, and Bank Nifty really pulling up. Nothing else happening. IT has recovered a little bit from the lows, still in negative territory, but big recovery on banks. Now, if this continues, um, these puts are going to go to a 14,850, and what I'll do is now, since there's only about 3 hours left to go, I'll move up the hedge as well. Yeah, let's wait and see what happens. Let's wait for the 14,850 level before we make that change. So that is the plan for now. Okay, 1 o'clock update. Basically, IT took a second dip, and banks, after picking up close to 2% and more from the day, have given up a little bit. And this big candle is about 50 points in very, very rapidly. I think probably about 10 seconds, but now that's getting bought into again. So yeah, 14,800 once again seems very, very important today. Now from where we are, our position is an inverted triangle, 14,800 call and 14,850 put. This is currently worth about 100 points, and yeah, there will be a guaranteed debit of 50 points, and in that range there's potential 50 points for DK. We have the same position here as well. So while shifting, we lost a little bit to slippage, but that's part of it. Another question I get asked is, okay, we were at a decent M2M profit, why did we not take it off? Very simple. The DK on this is about overall 50 points. That would give us a profit target on this account of close to about the max profit of 7 lakhs change. So we want to get at least 60% of that before we start locking in, since today is the expiry. And yeah, that's where we are for now. I'll keep you posted. Okay, it is 120 and FMCG is now moving up. So ITC is really moving now, and that's pushing Nifty over 14,852. Now let's look at how exactly we look at this position. This call is in the money, so essentially we're short. I mean, till the strike it's like we're short futures, but it has 10 points of intrinsic value. This put is now at the money, and it has 0 intrinsic value and has an extrinsic value of 35. So the call that we are short, an intrinsic value of 50, an extrinsic value of 10. So we just need to look at the extrinsic value. It's 10 and 37. You can say close to about 47, 48. Now that is the position. How do we adjust this? We will adjust this by moving up these calls to the same strike as the put. That will give us far more extrinsic value from our call sold versus its intrinsic value at that point of time. Now the problem with doing that is the downside protection that we're now being enabled by having in the money calls short will be taken away. So that is something that we will only do when we are almost convinced that this upside is going to hold. Just by FMCG carrying the index up is not enough for us to say, okay, let's move our calls also at the money. If Nifty Bank continues its rally, now it's been holding this same position for a while because that 35,000 is a big psychological mark. So if it goes higher than that, or we see Reliance move up, see Reliance is taking a dip to compensate for the fact that the rest of the indexes are heading higher. Reliance is now taking a dip. IT as well is quite flat for a while now. So there's no real reason for us to now give up our downside protection as of yet, because this position still has a good intrinsic value of 50 points. So sorry, extrinsic value of 50 points. So we will hold on to this position at a point where we're like, okay, the downside risk isn't that much. Then we will give up our downside protection and move it up. Similarly here, it's the exact same position, exact same logic. So the point at which we will move it up is when the intrinsic value in this call is almost becoming 0. Sorry, the extrinsic value in this call is almost becoming 0. That is when we will move. Till then, not really. So also based on what the OI is looking like, this range that we're currently holding looks pretty good. So let's see what will happen is, once let's say this range holds good and the extrinsic value in this spread decays to, let's say, 30 rupees or 30 points, then we'll set a stop loss on the position of about 37, 38, and we'll trail it further, because towards expiry, if the range holds, the extrinsic value has to go to 0 and the set has to be worth only 50. So I mean, that's the best case scenario. In certain scenario, we might get rid of one side and switch this to a straddle position and have a similar stop loss on the set also. So that we'll get to see towards the end how we change. One more thing to add, which I skipped, is so ITC is really moving up. It's like up 5% today. So our covered call could put our sold call might potentially be in danger. So right now, if we look at this, ideally I should start taking in credit from the put side. But because puts would have deflated so much on ITC today because of this kind of move, this is not exactly the best time for me to take additional credit on the put side, because a slight reversal will really mess up the entire spread. So what I'll do is, not on this day, but probably on Friday or the coming Monday, I'll try to start taking in credit from the put side and essentially making a strangle out of my sold call and still retaining the long future and managing the position in that way. So it's not something we'll do immediately. And of course, if it goes in the money also, we still make money on the covered call. It's one of the best case scenarios. But the idea is we don't want to lose money on the call and we don't want to give up our future. So we will be balancing it further with the put set. So yeah, we'll do that probably either tomorrow or Monday, depending on what the situation is looking like. Okay, so the 2 o'clock update is that the 14700 put now looks like something that is not going to be breached. 14900 call also picking up traction. 14800 put, 850 put, all of them improving. Reliance now picked up from the lows of the day, and Bank Nifty again and again is testing that 35,000 psychological mark and seeing a slight sell off from there. So now we need to see if Bank Nifty breaks out and breaks out well. If it does, then we will probably cut some of our short call positions. Right now, the inverted triangle is worth about 90 points still. So from this 90 points, the intrinsic value is almost 60. So there's only 30 points of extrinsic value in this. That means a break even is somewhere like 890 from this current, not considering the current mark to market. Similarly here. So we will wait now and see, because we don't want to now move up our calls and make a short straddle at 14,850 and then see that there's a bigger rejection on Bank Nifty. So this is where we are for now. Okay, what we're doing now is we are squaring off some of our short calls here and then shorting the 14,850 call, which will have more extrinsic value. And we'll try to time this a little bit since there is now momentum on the upside. We will okay, what we're going to do now is we're going to be short more puts than we are calls, and we'll only add to this at 38 if the price comes to 38. Okay, we'll just add to this. Same thing here. Okay, so Bank Nifty now holding about 35,000. So we had to change our position, which is now short straddle at 14,850. And this has a value of 60 points. Currently, the intrinsic value in it is about 25. This 35 points of extrinsic value. Bank Nifty very likely now to expire at 35,000. So it'll be interesting to see where that takes Nifty. Reliance also up from the day's low. FMCG continues to be on the uptrend. IT also flat almost for the day at this point. So yes, we're back to square one, more or less. Okay, we have now gone inverted again, where we're short the 14850 call and short the 14900 put. Now in this again there is about 85 points. We might move up our calls further, but not yet. We'll have to wait a little bit and see. But basically Bank Nifty is now holding about 35,000, and yeah, Reliance flat as well. Okay, so a lot of put writing happening. Seems like the downside is going to be protected. So what we're going to do now is get rid of all the in the money calls and shift them at the money. Okay, so there's about half an hour for the averaging to start, and there's immense put writing. So we're going to set basically a stop loss on the puts. So, and we get rid of our in the money short calls, safety, and we make them at the money. So across the bat now we are short straddling 14900, which has an intrinsic value of 5 points and an extrinsic value of 42 points. Once the averaging starts, the decay will really pick up, and at that point what we will do is we just set a stop loss to the position and exit it. There won't be any adjustments beyond that. And if there is an opportunity, if there's large momentum once the averaging starts, we might actually go long on the puts or the calls. Let us see. Okay, so the way things are looking right now, 14900 expiry would be ideal as per what positions are open. So we are also going for a 14900 expiry. Currently intrinsic value is about 15 points and extrinsic value is 30 points, so 34, something like that. We will trail a stop loss on the extrinsic value. Basically the extrinsic value goes below 20 or the intrinsic value goes above 50, then we will start cutting the position because there's no point in staying it any longer. So that's the plan for now. Okay, 20 minutes till averaging. Intrinsic value in the straddle is 18 and the value of the straddle itself is 45, 46. So this is at this point something we're going to hold. We're going to hold and wait for the decay to pick up. Thing about expiries is most people like expiries around round numbers. That's why they always move 50 points at a time when they move during expiry. They like round numbers. Right now the extrinsic value in this put is 15 and intrinsic value is 15, and this call has 0 intrinsic value. The set is worth 38. We're going to keep a stop loss on the triangle itself at about 50, and we're going to keep trailing that stop loss down as the decay starts to begin. Now the averaging period is about 15 minutes away, so we are going to hold on to this position and keep that stop loss in mind. And this is getting pushed towards 14900 because that's where people want it to expire. So that's going to be the game plan for now. We were about 36. Once again, 50 is our stop loss. When it's less than 30, we'll move it to 40 as our stop loss. Expiry management. Bank Nifty keeps going higher. FMCG keeps going higher. So people are selling Reliance like, oh please let the momentum not super push us over 14900. Want 14900 but not more than 14900. That's exactly the idea we had why Reliance is being sold here. There's nothing that led to this except for somebody saying
They don't want Reliance to go over, Nifty to go over 14,900. Bank Nifty 251. Does it go till 35,500? Is that the idea? Or is it being used to keep Nifty at 14,900? Interesting. I don't think Bank Nifty goes to 35,500 because that would push Nifty up by at least another 20 points, and nobody would want that. Like, nobody wants that to happen with Nifty right now. There is all these shorts here, so one would think that Bank Nifty wouldn't do that, but basically it's being propped up, so this 14,900 is held properly for a while. Okay, this is when like things get interesting, right? So just 5 minutes to go for averaging. That's about 8 points of intrinsic value in this put, and the rest is extrinsic value. So 13 points, 13 points you can say extrinsic value, 26 points of extrinsic value. And basically what will happen now is, generally we like to expire around uh, the point where it's a round figure, right? So most people would want Nifty to expire at 14,900. You see, Bank Nifty tried to move up, got sold into by about 100 points to pull it down so that Nifty doesn't go up too much. Reliance was going down too much, got bought back, so that 14,900 is around there. What we'll do now, let's say we want to buy this back and we'll be exiting basically at a slight profit. We will be spending about 31, 32 rupees, 31 points. Instead, what we'll do is, if the spot reaches 14,870, we'll cut the put side and we'll put a stop loss on the call side, which is maybe 2 or 3 points higher than what it's trading at. And same vice versa if it goes to 14,920. It will cost us the same as buying back this spread. So instead of buying back this spread now, we'll wait for it to decay more, and we'll set that as a spot target of 14,970 and 14,870 and 14,920. So that's the idea here. The other position is also doing quite all right. It's the same position, so same thing to do here as well. Okay, averaging is started. The average is going to be at the moment slightly below 14,900, and the call is still worth 8. The put is 17, so 25 points. 25 points, even if we our stop loss on the put fix, which is at 31, and our call stop loss is also 31, which we have the orders, then we'll exit one and we'll set a stop loss on the other, which is slightly below the price it will be at. So far looking all right. Another 25 minutes that I'm going to be in this trade if we end up staying here and my stop loss doesn't hit. We're modifying the stop loss orders. 51. So currently now the spread is worth about 20. Our stop loss on the put side is 31. My call almost certainly going to be worthless, and yeah, the put also could be worthless. Let's see. It could be a picture perfect finish. So there's somebody sitting out there with a calculator and saying, okay, we spent some time below 14,900 and to spend some time above 14,900. So the average picks up to 14,900, and that is probably what is happening here. Now the call is really expanding and the put is crashing. So we are going to go with our spot based stop loss, which is 14,920, at which point we reach this trade and we'll be locking in a good amount of profit also. And we'll set a stop loss on the put. We'll probably exit both, but there'll be nothing left in the put at that point anyway. So yeah, somebody's sitting there at the calculator and saying, okay, 14,900, how many seconds, minutes do we spend above it to average it properly? Okay, the call is trading at 15, which is nowhere close to what will actually be worth. And the put is trading close to 6. So we have a stop loss on the call at 25 and on the put at 30. So yeah, I think so far our hypothesis 4900 holds. So we're going to hold. There's about 18 points left in this, and the average probably has an intrinsic value of something like less than 5, so yeah, still 13 points. We'll move down our stop losses further in a bit. We'll set both at 21. Yeah, so far so good. Straddle has 15 points left in it. Yeah, this was one of those tricky days. We had to move all the way from 14,700, 14,750 straddle to 14,800 straddle, 850 straddle, and we're ending on 14,900 straddle. It was not one of the best expiries, but yeah, it was just different things had to be done for risk management at different points. Had we kept our initial view, we would have been all right, but this works as well. So almost about 310. There's hardly going to be 10 points left soon. I have something like 12 points, and we'll set both stop losses at 18, 18. So we'll be putting 6 points on the table for potentially 12 points. So that's the risk reward. We'll change everything to 18 now. Okay, we spent a good 5 minutes slightly below 14,900. We spent a good few minutes slightly above 14,900. Average should be as close to 14,900 as possible. We have stop losses on both at 14. So now we're trailing. That locks in a good amount of profit already. So we're now just trailing that 14. I think it's now just going to remain at 14. It's either 14 hits or we get 10 additional points, or maybe not all 10. With MIS, it'll push us out 5 minutes before. Maybe we get a good few more points. And same here. So yeah, we'll see you now probably at close when we start getting pushed out. Okay, so there was a slight dip of about 20 points after the high made after 3 o'clock, and that expanded puts. That would have stopped out a lot of people. It did not stop us out. We have a stop loss on this about 16, so we either lose another 6 points or potentially gain a little bit. So we'll have to see. We have about 50 points left in the call. 50 points doesn't seem like much, but since we're short about 16,000 shares of Nifty roughly, that's still 8,000, and that'll cover the charges. So yeah, on the put side, it's 6 more points. That's all right. I mean, looking at most expiries, how typical expiries like to be, they either like to make no moves and expire around figure, or have a large move at 3 o'clock or 3:15. Very unlikely that the last 7 minutes, 12 minutes is going to see some big move. So yeah, we'll probably move that 16 down now to 12. Now that's worth only 7 rupees. This literally is 7.5 points left in this triangle. So 7.5 points is still 7.5 points. We're going to try and see how much more we can capture. So the average should be extremely close to 14,900. Now we're dipping again. We have a stop loss on this on 8 for some of the position, and a stop loss at 11 for the rest of it. We will probably manually exit it now, and we'll wait for the stop loss at 8 at least to hit, and then we'll manually exit the rest if required. But yeah, the spot is currently 15 points below 14,900, but the average should be very close to 14,900. So that's the idea here. Okay, unfortunately, we're not going to have too much time. We're going to start getting pushed out of our position automatically in about a minute. So we're now starting to exit. It was a slightly tricky expiry. The up move, we probably didn't expect Bank Nifty really took off. Okay, now it's not going to let me square it off anymore. I don't think so. Zero the would have kicked in. Yeah, it's cancelling my orders, and it'll probably kick us out somewhere around 6 rupees or something. That's okay. So overall, quite a good day. We made about, let's say, 1,40,000 here, and 3,60,000 here, so 5 lakhs for the day. And yeah, it was probably a tricky day, and had to go all the way till the end, but yeah, ended in profit. There we go. Everything is pushing us out. And the cover that we sold in Bajaj Finance really did take a hit, so that's okay. We have to also, like, we couldn't manage any of our other positions like ITC or Bajaj Finance covered call. Our covers are taking a hit, but we can't manage them right now because it's okay. I mean, if I have to give delivery also, it's fine. I just don't want to sell a put when it's up 6% already. The puts would be cheap as hell, so we'll wait. All right, thank you so much for watching. I hope you had a good trading day, and I hope you found this useful. And please do share it with anybody who you think would find it of interest. We're going to do this every day that I'm trading, and to make it very authentic and transparent, I'm going to tell you the days I'm trading on in the video prior. So I'll not be trading tomorrow on Friday as I'm traveling. I'm outside. Had some problems with my internet also today. So I'll be trading next on Monday. So I'll catch you then. Have a great weekend. Bye bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like the video and subscribe to the channel. To find us on Twitter and Telegram, use the username NiftyBN. Also, I post some of my trades to the community tab, so don't forget to check that from time to time.